Yo, what's good, guys? What's going on? What's going on, guys? What's good? What's up? What's up? All right, here. Let me put out that I'm live on YouTube, right? Because there's no one really watching the stream right now. Let me put it out. Let me put it out. One sec. Make sure that I'm live real quick. Hopefully, you guys are doing good, man. Hopefully, you guys are doing good. Let me see your channel. There you go, live. All right, bet. Let me put it out real quick. Let me put it out there. Let me put it out here. Yo, what's up, Fabian? What's up, bro? What's up? What's up? What's up? Hold on. Let me put it out here in the trading chat, and then put it out here in the futures chat. One sec. All right, there we go. What's good, guys? What's up, everyone tuning in? What's up? What's up? What's up? What's up? Bro, I haven't done a backtesting session in a minute. Maybe like what? Like maybe 2 weeks or so. It's been a while. I've been more focused on the trades and the live trading rather than doing some backtesting, some classes and all that stuff. Well, I've been backtesting, but not really on stream. You know what I mean? So I just decided to get on today, catch up with you guys a little bit, review some trades, help you guys out on some of your questions, and backtest the indicator. All right. Now, for the most part, mainly, I'm sure the whole reason as to why you guys are tuning in and joining is mainly because you guys are probably very interested in the indicator. Now, for the most part, I want to say that it's pretty much ready. For the most part, it's pretty much ready. But obviously, I just want to backtest it just a little bit more before I really release it to make sure that everything is working perfectly. Fabian, bro, Joker, what's up, bro? Yeah, great day today, dude. I already know, bro. I already know. So yeah, bro. Hopefully, you're able to get, I don't know, maybe your third or fourth payout already in a row. This month, hopefully soon, bro. But yeah, anyways. So I'm pretty much getting on. I'm just gonna be backtesting some trades using the indicator to see if it's able to catch it. And if you guys have any questions as we go on and I review the trades, ask ahead in the chat. I have it opened. So yeah, just let me know. All right. But yeah. All right, let's get this started then. Okay, so the first trade that I want to review for today was actually the one that we caught today. It was quite a backtest it on Discord with gold tonight. Nah, bro, I don't really trade gold like that. I have to backtest it for myself. That's something I just need to learn for myself. You know what I mean? But yeah, I've been seeing a lot of people trading gold recently, and it's pretty nice. It's pretty nice. But I need to learn it for myself first. You know what I mean? But for now, I'm gonna be more focused on the trades and all that good stuff. You know what I mean? That's what I do. Anyways, so. First things first, let's go ahead and get started with the trade that I wanted to review for today, or at first was the trade from today. For those that don't know, maybe you guys aren't in the premium or you guys just didn't tune into the stream today. We ended up catching a beautiful 85-point trade over on NQ in about 10 minutes, I think. Yeah, pretty much 10-ish minutes around there. Yeah, pretty much 10 minutes exactly, actually. So I actually wanted to review this trade, see if the indicator could have caught it, explain to you guys what I saw in more detail, because obviously you guys know we got on stream a little bit early today, and I didn't really explain the setup. I just told you guys that I'm taking longs, and it played out and all that good stuff. So yeah, if we trade in 20 minutes with top step come by this account in 20 minutes, what do you mean 20 minutes? Right now, well, you can't trade because the market opens at 6 p.m. Eastern time, at least. Hey, what's up, JD White? What's up? What's up? But yeah, kind of like explain a little bit more what you mean. Racing Karif. If we trade in 20 minutes with a top step combine, does that count? I'm not really sure what you mean in 20 minutes. Maybe you mean 30 minutes. If I trade in 30 minutes, I market open does it count? Yes, it does. If that's what you're asking. Yes, it counts. Yeah. Yeah, so yeah, if you pass your account or whatever at 6 p.m. going forward, yeah, it will count. Of course, the market is open. You know what I mean? Hey, what's up, Kenny? What's up? What's up? Anyways, all right. So yeah, the trade that I want to start off the in the stream with the indicator and all that good stuff is the trade from today. All right, like I said, I didn't really have too much time to really explain the setup today as everything was happening so fast in the market. But we knew what we were looking for, but maybe some people were a little bit lost and just followed our trade to make money, and you just didn't understand it at the end of the day. So let's go ahead and review this trade really quick. It was pretty much NQ longs at 951. So let's go ahead and go back into the chart and go into 951 or 950, I guess you could say. And yeah, but before we do that, let me turn off the indicator for just a split second. Actually, let me not, right? Because I kind of want the indicator to do everything for me to see if it's able to find everything and be ready for you guys, all right? But I know what I saw for myself, and I'll explain it as we go. All right, now let me use the replay feature and go all the way back to 9. Let's go to market open at 9:30. And see what's going on, right? So first things first, as always, guys, you guys already know the deal. when it comes to when we're coming into market open, the first thing that we always have to do is make sure that we have all of our levels of liquidity pretty much laid out, marked out, and just ready to go for market open. All right. So coming into market open today, right? Looking at for those that don't know, anytime that the market opens, I always have a clean chart, and the first thing that I always do is start off on the 1 hour time frame, then work my way down. Now you might be wondering, okay, well, what do you mean by starting off on the 1 hour time frame? What exactly do you start on the 1 hour time frame? Well, I don't really look for any setups or anything in particular. All I look for is the important levels of liquidity. All right. Now let me catch up with the chat real quick. Let's see. Is that a setup that you're waiting to take blast or just commentary? Oh no, that was just the indicator. This is nothing. This everything here is the indicator. I have no drawings. Let me see. I mean, like Top Step, they have some rules like we can only trade during market open. Oh no. Oh, yeah, no, but you'll be good. You'll be good. David, I love you. Hey, much love, much love. I love everyone in here, man. Why not the 4 hour? Honestly, I feel like the 4 hour and the 1 hour are very similar. Um, Realistically, if you use the 1 hour, you're gonna get more detail behind that 4 hour candle. So, in my opinion, from like lots of backtesting, I feel like the 1 hour is just a little bit more informative. I know I always say the higher time frame, the better, but I feel like there's like a limit in that saying. Um, because the 4 hour it's good, but it displays very little. It displays like 2 candles per day. So there's very little that you can work with. Now, if you go on the 1 hour time frame, you still don't have as many candles to work with, but there's a lot more, right? So for me, when I'm currently charting my levels for the for the following day or for the following morning, and so on, I always start off on the 1 hour time frame and just work my way down. I never use the 1 hour. I mean, I never use the 4 hour. I never use the daily. I never use the weekly. I just stick to the 1 hour and then just work my way down. All right. So coming to market open today, you guys can already tell that the indicator is pretty much doing everything for us off the bat. But let's take some, let's take some I don't know how to say it, like some action and kind of like just mark it out for ourselves, just so we're super sure. All right. So you guys know at the beginning of this week, or maybe on last Friday actually, the market ended up gapping up over here, creating this massive gap up in the market, right? So what we're going to be doing is we're going to go ahead and mark out our first level of liquidity at the swing low, and then we're going to be using this low as our just swing low, and just the main low as we go on, right? So we're going to start off with this low over here at 25,698.50. Right, and as we go on, we're just going to be marking out all of our nearby levels of liquidity as we go on, right? Starting from this low going forward, right? So we found this low all the way down here at 25,698.50. And ever since then, we found this low, we pumped up, we kind of pulled back a little bit here, right? On the 1 hour time frame. So on the 15-minute time frame, it might look like a better pullback. But in this case, yeah, we can tell that it's somewhat of a pullback here. So we're gonna go ahead and mark out this level over here at 25,796.25. And once again, for those wondering, or for those maybe new to marking out levels of liquidity, or maybe just new to trading, the whole reason I'm doing this is because remember, when I find my levels of liquidity, I'm pretty much finding them based off of every pullback depending on the trend. So if it's a bullish trend, I'm looking for pullbacks to the downside. If it's a bearish trend, I'm looking for pullbacks to the upside, and then I mark out my levels of liquidity there. All right. Do you see TGR's trade? I haven't. I'll check it out after the stream. Not that it's really too important right now. You know what I mean? But anyways, so we have this low down here. We have another low over here. Then as we went on, we found another pullback right here in the market, which is where the indicator started marking out its levels of liquidity over here at pretty much 940, 941 if you want to be specific, right? 942.25. Right, so we have this low over here. So far we have 3 lows that we've marked out, which is these numbers over here. Right, do we have any other ones? We actually do right over here. As you can see, the market found this low, pumped up, had like a red candle, kind of like a pullback, found this low, and then we pumped up even higher, creating a new higher high. Right, going forward, we pumped up. We did create some pullbacks here, but not that they're really too important at the moment because, I mean, hey, they've already been taken out way, like a long time ago. Right, but the current value level of liquidity, which the indicator also marked out for us, which is a good thing, when I release it, it's going to do the work for you guys. It's also marking out this level of liquidity over here at 2647. All right, let me take off my sweater real quick. Hold up. There you go. It's really hot. Okay, so yeah, we have so far quite a bit of levels of liquidity over here on the 1 hour time frame. And other than that, I know we're selling off currently before the market opens, but there's no low to mark out, so there's not much to really mark out here yet. All right, now obviously on the 1 hour time frame, we have found every level of liquidity to the downside, but we haven't found every level of liquidity to the upside. So let's go ahead and take care of that real quick, all right, before the market opens. All right, so before we come into market open, obviously we're gonna start off with the all-time high level all the way up here. which the indicator, once again, already marked out for us, but let's do it for ourselves just so we understand what we're looking for and we understand why exactly the indicator is marking it out. All right, so this level over here is known as our all-time high level of liquidity over here at 26,399.50. All right, at the same time, as we found this high, the market sold off, pulled back, found this high, and sold off even more, creating a lower low. Right, so we have the main high, lower high. The market sold off, pulled back, found this high right over here, and then sold back down. Right, so on the 1 hour time frame, we're pretty much ready. We're pretty much ready for the market to open, but we're not fully ready yet because we only found our strong levels of liquidity on the higher time frame. Now we need to make sure that we go to the smaller time frame and make sure that we just find more of the valid levels of liquidity that we might have missed on the higher time frame just because they might have been filtered out due to the chop. Right, so if you guys are following this strat, whenever you guys finish marking out all of your levels of liquidity on the 1 hour time frame, just work your way down to the 30-minute time frame, and then once you're done with the 30-minute, just work your way down to the 15-minute. All right, so before market opens, which is around here, we can see that we had an Asia low, quite a bit of a pretty strong low over here. So let's mark it out just in case over here. And let's see what else we got here, right? So I'm assuming we marked out. Yeah, we already marked out this high over here. What other high do we have? On the 30-minute, it kind of looks like we already did everything. Like we marked everything out. The Asia high, all-time high up here. The internal high over here, the London high over here, we kind of already marked it out. We have the Asia low over here that we already marked out. We have the external London. Do we have any other ones over here? Not really. So we're pretty much ready, right? Now let's see what else. Before we're fully ready, let's go ahead and go into the 15-minute just in case you might have missed 1 or 2 levels. Just in case, you guys never know. Every level in the market is extremely important because there's a lot of orders that sit in every single level that can really change the whole aspect of the market. All right. Now, let me catch up with the chat in the meantime. Before I do that, let me drink some water real quick. All right, because you guys know these streams take a lot of talking, so I get very thirsty. One sec. Okay. Oh, that water is really cold. Anyways, okay. Let me see. What's with the rectangle? The fair value gap? Yeah, the rectangle is pretty much the fair value gap. Yes, that's pretty much what it is on my chart. Remember, the rectangle that keeps popping up in the chart is the indicator. It's finding the fair value gaps for us, right? So it automatically does it for me. All right, but we're gonna be using that in a second. All right, what makes a liquidity level strong or weak? Very good question. All right, to pretty much give you a very straightforward answer, the stronger the bounce, the stronger the level of liquidity is, right? So let's say, for example, right, the market sold off like crazy here, right? We can see that we have a very strong selling candle and then a very strong buying candle. So this level of liquidity, we know that it's fairly strong, right? Because we had a lot of action and a lot of volume inside of this dump and pump. Right now, let's compare this like kind of sell off with the pump up compared to this one right here, right? Obviously, this level is still valid, but it probably won't get as respected as this one could. Do you get what I'm saying? Right? So the more volume and the more action and the more everything that you see in a certain area, the chances are that it's going to be more respected than other ones like this small one or this one or this one or this one. You get what I'm saying? Now, it doesn't make these any less invalid, but it just makes the market like you just have more confidence behind this type of setup rather than this one because it just looks so much better. If you get what I'm saying, if that makes sense. All right. So yeah, let me know. Let me see. Bro, I blew my only eval yesterday. I feel so bad because I broke my rules and also because you guys caught a banger trade today. I couldn't catch it because I have no accounts. I really need help with my discipline and mental. I can't seem to get out of the stage. I know how to trade with the strap, but my mental is completely messed up. Okay, well, obviously that can go a very, very long way. It can be a million things. But as I review this trade and mark out the chart and everything, feel free to go into more detail as to what you're feeling, and I can help you out, or at least I can try and help you out. You know what I mean? So yeah, bro, send it over in the chat, and I got you, bro. But just go into I know, bro. I know you're a racer, bro. Trust me, I know. But yeah, go into more detail, bro, and I got you, bro. Anyways, but yeah, on the 15-minute time frame, once again, we have pretty much every level of liquidity marked out, so we're pretty much ready for the market to go ahead and open. And as we open up, we can go ahead and start finding some setups. All right, so currently, looking at the obviously, I forgot to mention this. When we come into market open, you guys know that my go-to time frame. Once again, I always say this: there's no secret time frame. There's no time frame that is correct and incorrect. But for me, I have preference. Right, time frames is on preference in terms of how long the candle takes to form, the setups take to form, and so on, right? So for me, I kind of prefer the 5 minute. So anytime that we go into market open, I'm always going to be on the 5 minute time frame at first, right? Obviously, we can find some setups in the 1 minute, maybe the 15 minute, and so on. But for me, my automatic default time frame coming to market open will always be the 5 minute time frame, right? So looking at the 5 minute time frame coming into market open today, right, we can see that obviously we have a few highs and lows pretty much marked out. We just finished marking them out right now. But coming into market open, which is currently 8:25, right, coming into 8:30, 1 hour before open, we can see that we took out this Asia low over here, right, which could play a big role later, right? Let's keep that in mind, right? Now, we saw that today, actually, we had so much more volume than we usually do. Now, you might be wondering, hey, why was today so much more different than 2 days ago or 3 days ago or last week? Well, remember, guys, yesterday we had FOMC. And with FOMC, the market dumped like crazy. All right, and that volume from that pump and dump got carried over to today's price action. Right, and keep in mind, we also had Meta, Google, and Microsoft earnings come out yesterday, which also made the markets move a lot. So today was pretty crazy just because of that. All right, so coming before market open, in fact, 1 hour before the market opened, we already had a few setups to even take. So if you guys wanted to trade before the market even opened or before the New York session opened, you could have still taken a trade most likely. All right, now don't worry. I woke up a little bit early today and I tried to find a setup, before the market opened, but unfortunately I couldn't find any. So don't get any FOMO, right? But the setups were here definitely. All right, so we can see that the indicators are already marking out some fair value gaps for us before the market opens. And if we actually measure out these candles, we can see that these gaps are some valid gaps, right? You guys know typically with NQ, I look for 40 or more points, right? For a valid imbalance, which is then followed by a valid fair value gap. So in this case, we have a valid imbalance because the indicator found a 47-point candle and it marked out the fair value gap just like this, right? So it does it for you, or it does it for us, because I'm going to be using it too, right? And also here as well, right? We see a huge selling candle, no wicks at all, right? And if you measure it out, it's about 46 points to the downside, which is more than 40 points, which makes it a valid imbalance, which also makes it a valid fair value gap, right? You never trade the Asia session. Why is that? Oh, good question. Well, to be very straightforward with you, the Asia session is very, very slow. And the reason why it's very, very slow is because the New York session is not open. Right now, the stock market, right? The market that the NASDAQ and the S&P 500, which is known as NQ and ES, the market that they follow is closed until 9:30 a.m. EST, right? So if it's currently 6 p.m. EST or almost 6 p.m. EST, right? Why do I trade it? Well, because NQ could still move because there's people trading the NASDAQ itself, but there's no direction, right? There's nothing open, right? We can't have Tesla pump up because Tesla's closed. We can't have Nvidia pumped up because Nvidia's closed until tomorrow, right? So don't expect any super clean or clear movements throughout the overnight session until the New York session opens up. Now, yes, you can trade other tickers as well that can possibly work, like gold, for example. Gold has been one of the tickers that a lot of you guys have been trading recently, and it's been insane, right? I want to get into it, but I have to learn it for myself a little bit more now, but in its own time, All right, let me see. The indicator won't work during other sessions, correct? Yes, the indicator, we completely turned it off because we know how uncertain other sessions can be with our strategy and with what we trade, which is NQ and ES. You get what I'm saying? So yeah, we have it completely turned off. So if you guys are trying to use the indicator during the Asia session or the London, we are not going to allow it with the indicator because we know that it's not going to give as much accurate results, because these sessions, at least from my back testing, it doesn't really respect any of my model. So I don't want you guys really using the indicator or following the indicator with something that we know that's probably not going to work, right? So we only have the indicator turned on during the New York session. We have it already coded into the indicator, so no matter what you guys try, it just won't work. It's more for safety, I wouldn't say. I just don't want you guys to be stupid. The fair value gap, can we make it a different color? We have to kind of implement that into the indicator. Right now, we kind of have it just like a invisible color, I guess you can say. Like it's like see-through. You get what I'm saying? Where can we find the indicator? It's not ready yet, but I am planning on releasing it either this weekend or sometime next week. It's pretty much ready, but I have to put it out. You know what I mean? But yeah. Anyways, coming into market open, we can see that we have a bunch of fair value gaps already marked out. Obviously, the market is not open yet. It's only 8:35. You guys know the market opens up at 9:30. So let's kind of play this a little bit more, right? As we went on, the market went ahead, and in fact, this was one of the setups that I wanted to trade coming into market open. I don't know if you guys tuned into the stream today, but you guys might have remembered coming into market open today, I actually started the stream, I think 2 minutes before the market opened. And I was telling you guys off the bat, I'm like, guys, I want to go into longs off of this inverse, right? And I'll explain to you guys exactly what I was seeing here. Although it never really played, well, it played out, but we didn't trade this setup specifically. All right, what's up? Anyways, okay, so before the market opens, as you guys see right here, it is currently 9, maybe like 8:45 in the morning, right? But the indicator is finding somewhat of a setup, right? If you really zoom in here, you guys can see that we have a gap here, right? And if you measure out this candle from top to bottom, it is a 44-point candle here. And once again, when you're trading NQ, anything more than 40 points makes it a valid imbalance. And a valid imbalance also creates a valid fair value gap, right? And that gap is right here, right? Where the indicator is marking it out. Now, coming into market open, what can we already identify as to what's going on? Well, coming into market open, we can see that we just finished taking out the Asia low drawn liquidity, right? Which is going to be this low right down here, which is also what the indicator is marking out for you guys. So if you guys don't know how to find the Asia low or the London or whatever, do not worry at all, because we coded it into where it can find it for you, right? So that's not going to be anything you guys ever have to stress about again, right? Or at least as you're using the indicator, right? But yeah, we have an Asia low that right down here, and right on top of this Asia low, we have a pretty valid fair value gap that we can possibly look to inverse, right? So coming into market open, I told you guys on stream, I'm like, hey, like, check this out, guys. Look at this. So coming into market open right over here, coming into market open, you guys can see that we have a lot of buying pressure coming in almost into 9:30, right? So I'm like, okay, well, before the market opens, we have a lot of buying pressure. As the market opens, if we can get a little bit more buying pressure to go ahead and hold above 26,139.25, that'll confirm a bullish bias due to a DOL sweep. And if we get a bullish bias with the DOL sweep followed with very strong buying pressure, we could potentially look to inverse this small but valid fair value gap into our price target above right over here, right? Which pretty much makes it like a 1-to-1 risk reward, right? Not a bad trade at all. And I was actually really continuing this trade, but here's where the but starts, right? Check this out, right? So coming to market open, I'm gonna give it 2 or 3 more candles, just like that. And coming to market open, check this out, right? So we have a lot of buying pressure, right? 5 minutes before market open, right? We're getting a lot of buying pressure, huge red to green. We're about to get the DOL sweep. It seems like we're about to inverse it into higher, right? Check this out. I play the next candle into market open, boom, straight down, right? So not that we got stopped out, we never took the trade, but I'm like, okay, well, before the market open, I'm like, dude, like this setup looks really good. But unfortunately, not that it wasn't valid anymore, but the thing is, we dumped so hard that we got so far away from it that it just made it very, very unlikely that we're gonna pump back up into it. So I'm like, you know what? Whatever. It was a good setup. It sucks that we couldn't catch it, so we gotta trade another setup, right? So this setup is kind of out of the picture, but it's still valid. Remember, we never even tapped into this fair value gap, let alone take it out, right? So we can still use it in the future. So keep that in mind. All right. Let me get you with the chat. Let me see. So is the fair value gap a zone of liquidity or a price target? It could be both, actually. Very good question. It could actually be both. You could target fair value gaps. If you get a long position or a short position before we enter a fair value gap, you can always target that gap, right? But a fair value gap can also be a very strong area of liquidity, right? Which is why price typically retraces into fair value gaps, right? Which is how we use it. But yeah, let me see. What's the maximum point of a fair value gap that you wouldn't trade? Good question, because I know I told you guys the bigger the fair value gap, the better. But I feel like sometimes a really big fair value gap could be too much because, I mean, it's just too much. You know what I mean? So honestly, I like to keep my limit at like, I'm not gonna lie to you, I don't even have a specific number for that. I wish I could answer that, but it's like, if you know, you know what I mean? Like, if a fair value gap is way too big, you just know it's like, dude, I'm not gonna bother even trading this. You know what I mean? But just try to keep it at like a reasonable size. You know what I mean? Like 40 to 100 points, I would say that's pretty reasonable. Anything more you could trade it, but it could be like a little bit less likely. You know what I mean? How much will the indicator be? I don't really have a price in mind. I want to say maybe like $10. I feel like that's pretty fair. But I don't know. That's something I have to talk with my developers with. You know what I mean? But anyways, okay. So yeah, coming into market open, obviously you guys can see that we had a setup. We couldn't take it because we never got into it. Not that I was invalid, but we just got very far away from it. But coming to market open, right? You guys see that we sold off like crazy today. We took out the London low, right? That we created at 9 o'clock exactly, 9 a.m. EST, right? And as we went on, we went ahead and took out the London low, right down here. We took out the external low right down here. And as we played it on, we can see that we also took out even more lows at 26,006. And we just, in general, just sold off like crazy. So we took out so many levels of liquidity to the downside where I'm like, okay, well, I know we're selling off and I'm open to taking shorts, but realistically, with our model, the more levels of liquidity that we take out in one direction, the more likely it is that we are bound to reverse. All right, so let's take that into account. Coming to market open today, we took out the Asia, we took out the London, we took out an external, another external, and then we took out some little mini levels of liquidity over here. So we took out in total of about 4 to 5 levels of liquidity. All right, why did it dump so hard? Remember, guys, the volume from yesterday's FOMC carries over to today. And keep in mind, when the stock market closed yesterday, we had we had Meta, we had Microsoft, and we had Google earnings come out, right? And they came out pretty bearish, I'm not gonna lie, right? So with that news coming out bearish, coming into the next day the stock market open, everyone's gonna be panic selling and causing the market to sell off, right? So that's exactly why the market sold off today, off open, right? Everyone was selling because of FOMC, of earnings, and so on, right? Let me see. It should be free for the premium members. I thought about it, but I'm investing a lot of money into this, and if I'm gonna be putting it out there for you guys, I would at least want to make something back. You know what I mean? Just maybe something small. And for the premium, when I release this indicator, I'm not gonna change a thing of how I work. I'm still gonna be live training. I'm still gonna be doing these classes. I'm still gonna be helping everyone out. So I feel like, you know what I mean? I don't know. Yeah, I really gotta think about it. But yeah. Let me see. I'm $1,200 away from passing my eval. Very nice, but we can get that done in like not one, but maybe like 2 or 3 trades. When will the indicator be ready? Once again, I feel like it's going to be ready by either this weekend or maybe sometime next week. I would say maybe more sometime next week. But anyways, yeah. So the market coming into market open today dumped quite hard, right? We took out some levels of liquidity, in fact, a lot of levels of liquidity. And as we go on, you guys can notice that the indicator is actually finding 2 fair value gaps in this range. Why exactly? Well, if we zoom in, what are you guys noticing? Well, once again, guys, we just had 2 huge selling candles that sold off nearly 200 points, which is beyond insane. In fact, in 10 minutes, which is even crazier, right? So if you measure out this candle from top to bottom, it is an 84-point candle. It's pretty much more than double of what we look for a valid fair value gap. Yeah, it's still a valid fair value gap because obviously it's in that range, right? So there's a gap here, right? Now we also have another selling candle, which if you measure it out, it is about 97 points, right? And obviously that's way more than double of what we need for a valid fair value gap, which makes this even better of a fair value gap. All right, now this is where the setup starts forming. All right, guys. So let's kind of put everything together. The market opened, we sold off, we took out about 4 to 5 levels of liquidity to the downside. We have yet to tap any of any level of liquidity to the upside at all. All right, so there's a lot of room for higher. There's not much more room for lower. It's not impossible to go lower, but it's not just as likely anymore. All right. So once again, look. So we took out Asia, we took out London, we took out external, we took out external, and we took out external to the tick at 25,942. Right. Now, at the same time, we have a bearish value gap above and another fair value gap above up here, which is another bearish one. So how exactly can we take this setup? All right. Well, a lot of you guys might be wondering, okay, well, why can't we just trade longs from this setup here, right? Wouldn't it be an earlier entry, which is way better because we can make more money if the trade goes in our favor? Well, yeah, it can work. And in fact, if I'm not mistaken, the indicator also found longs here, right? Which is why you guys can see that it told you guys to enter longs here, right? But in my opinion, I don't think you guys should enter off the first gap. Let me explain. All right, and I said this on stream, but I'll say it again. All right, when you guys are trading my fair value gap model, my inverse fair value gap model, all right, do you recommend trading Asia hours? I don't have too much experience for it for myself. I don't want to be one to say no, but I just don't trade it for myself. I don't like it. Especially with Nasdaq and ES, I just don't like it. Maybe for gold it'll be a lot better, but other than that, it's kind of like, you know, kind of whatever to me. I only trade the New York session. It's what moves the best and what I like the most. You know what I mean? And what I'm more experienced with. Anyways, so you guys are seeing 2 fair values on your screen, right? And we're getting a drawn liquidity sweep right here. Right? Wait. Right here, right? We have a drawn liquidity sweep because we took out the level of liquidity at 25,942 And as we hold above this level of liquidity, our bias stays bullish. But now our bias is going to be even more bullish because we're holding above another level of liquidity at 2606 over here, right? So if we're holding above these two levels of liquidity with very strong buying pressure, and we're about to inverse this bearish rally gap here, why can't we take longs? Well, guys, the reason I'm telling you guys not to take longs off this one, even though the indicator is suggesting it, right? I'm not saying that you can't. The reason I'm just trying to say I don't suggest it is mainly because if you enter off this gap here, you're going to be entering another seller territory, which is the gap right above it, right? So if you enter longs right here, right, and we reject anywhere in this range, not only will you not have any price targets in here, but you probably won't even see a 1-to-1 risk-reward ratio trade, right? You will only be up about 17 points, right? So if you reject at this given moment all the way back down, you won't be able to take profits because you bought longs in a seller territory, right? So my tip to you guys is when you see two fair value gaps less than 30 points away from each other, you do not take it. If there's two fair value gaps stacked on top of each other, for example, right? Let me show off the indicator real quick, right? For example, we have a bearish fair value gap right here, right? The one that we're in right now. And we have another fair value gap right here, right? Can you take longs from this inverse? Why or why not? Well, I would say yes. And the reason I would say yes here is because if you measure the entry from this gap into the next gap that you can possibly get rejected from, right, it is more than 30 points, making it a more than a 1-to-1 risk-reward ratio trade. You get what I'm saying? Now, let me see the chat. RP always says he needs a 15-minute candle close in the right direction to enter confidently. Remember, RP trades a different strategy. If I'm not mistaken, I think he trades opening range breakouts with some supply and demand. I think I could be wrong, but I don't trade that way. I trade with whatever I see coming into market open, which with whatever direction that we take out, with whatever direction we take out, follow with the reaction. If I get the reaction that I want to see, I don't care what time it is, I'm going to take the trade. You know what I mean? But obviously, everyone is different. You know what I mean? That's his strategy. It works for him. Obviously, you know, he's a GOAT. He trades really, really good. But everyone has their own strategy. You know what I mean? Did you ever lose 5 trades in a row with this strat? Dude, everyone has lost trades in a row. I think the most I've gotten in a row was 6 trades in a row. It was pretty rough. Pretty rough. But dude, everyone goes through it. Everyone goes through losing streaks. And if they say that they don't, then you should probably stay very, very far away from them because they're probably lying about it. You know what I mean? Everyone goes through their own streaks. You know, shit happens in the markets. You know what I mean? But anyways, so yeah, as you guys see right here, from this inverse followed into the next gap, it's more than 30 points, making it more than a 1-to-1 risk-reward ratio trade. So in this case, if we inverse this gap, yes, you could take longs. Now, if we inverse this first gap down here, right? So if I mark it up from here to here, right? And there's a gap right above it up here, we would have not even 1 point of a price target into the next gap. We don't have anything. Do you guys get what I'm saying? So that's what I'm telling you guys. Yes, I get it. We took out the liquidity here. We took out the liquidity here. We had a ton of buying pressure into this inverse, but I wouldn't take longs yet until we actually inverse both of these gaps. And that's what I waited for today. So coming into market open today, after we got the DOL sweep and everything followed along, I just waited for a clean inverse off this one and this one here. And then I took NQ longs, as you guys can see in the alert right over here, right? I took NQ longs at 26,100 with my price targets at 26,175, which is inside of the fair value gap right over here. Then my next price target, which was the next fair value gap at 26. Oh yeah, 17. Wait, I forgot. Wait. Oh, I forgot to put a price target here. Oof, my bad. I forgot to put that in the alert. Oh well, whatever. You guys get the point. All right, so we had a price target at 133 and then 175, and then we had another gap at 224, which I don't really think we hit, right? But as you guys can see, this trade ended up playing out for over 85 points, right? So let's take a step back. Let's kind of summarize this trade before we move on to the next one, right? So, and by the way, yes, the indicator, for those wondering, yes, the indicator caught this full trade. As you can see right here, let it load, boom. It caught the trade. It told you guys to go break even here. And it hit all of the price targets, right? So PT1 hit for a 1-to-1 risk-reward ratio trade for 30 points. PT2 hit for 94 points. And then PT3, it hasn't been hit yet. And then the stop loss was moved to break even. So the indicator, when you guys are using it, it will guide you through every single trade. So let me show you guys. Right? So let's say, for example, right, you guys enter long right here, right, off of this inverse right here, right? The price targets, it will. I don't know if you guys see it. Let me kind of like. As you guys see right here, PT1, it will tell you the numbers, right? It will tell you what to target, so where you should be selling, right? And as the trade goes into our favor, right? Notice this. You see how it changes? PT1 just got hit for 30 points. That's because the PT1 got hit, right? So it changes here. Then our next price target will be at 26,137. We go up. Let's see if we hit 137. 137, 137. Boom. Hit for 94 points, 94.25 points. You see what I mean? So we have it like really, really coded. And as the trade plays on, you guys might also notice that the stop loss goes from 30 points. So when it hits the 1-to-1 ratio trade, you guys know my rules, it will move the stop loss to break even. So it'll tell you, hey, move your stop loss to break even after PT1 has been hit. You see what I mean? Bro, what's good, Gender, bro? Bro, shut up, bro. What's up, bro? What's up? Let me see. Is the indicator working with continuations yet? Yes. Or, well, we're working on it. But for the most part, yes, it's coded onto the indicator already, but we need to fix it up a little bit. Like, we're really making it work. You know what I mean? But yeah, that's your indicator. Yep, we're working on it. We're still coding it, but yes, this indicator follows everything that I trade, right? So the same exact trade that I put out today, if you guys didn't tune into the stream or didn't want to follow my alert, but you wanted to follow the indicator, it would have given you the same exact entry, the same exact setup, the same exact everything, right? So once again, we took longs off this right here. It hit all of our price targets for 85 points. Same thing goes with this indicator, or with the entry off the indicator. It also hit everything for, its given points. All right. But yeah, let's kind of like go back a little bit and let's take a step back and make sure that we have everything figured out, right? So once again, the trade played out beautifully, right? Once again, if we play this going forward, just like that, right? It hit all of our price targets, right? Now, why did this trade work? What's the name? It's not out yet. So were we supposed to enter? Well, yeah. I mean, that was the whole point of the trade. Yeah, we were supposed to enter off the inverse, bro. That's what I've been explaining for like the last 40 minutes. anyways. So, why did this trade work out? Well, once again, coming into market open, we had all of our nearby levels of liquidity marked out, right? Coming into market open at 9:30, what ended up happening? Well, first things first, we know that before the market even opened, we took out this Asia low, right? Without taking out this Asia low, we were already looking for a DOL sweep from this level of liquidity at 139 into this inverse into higher. But we never got that because at 9:30, when the market opened, we sold off, right? Oh, where were we supposed to enter? Oh, okay, bet. So, you could have entered off either or. I personally suggest that you should have entered off of this gap up here, which is where I alerted, over here. And Q longs at 26,100, right? Which was this inverse, not this one below, but this one above. So we don't have to worry about any other gap other than the price target. So I personally suggested the entry at 26.99, and I ended up getting the entry at 26,100. All right, and Hanif, I got you, bro. I got you, my man. I got you. But yeah, here. I'll do it after the stream because I already have the screen on and everything. But I'll check it out. But yeah, so once again, coming into market open, once again, we took out the Asia low. We were already looking to be bullish, but coming into market open at 9:30, the market sold off even more. We took out the London external, and another external to the downside. So coming into market open in the first 5 to 10 minutes, we already took out a lot of levels of liquidity to the downside, right? After we took out all these levels of liquidity to the downside, we could see that we had a lot of buying pressure kicking in these two candles. We're like, okay, well, if we're holding above the most recent level of liquidity taken out, which was at 25,942, right? And we're holding above it with a lot of buying pressure, and then we're holding above 26,006 and then 26,47.50, right? We have swept 3 levels of liquidity in one go, right? Which is really, really bullish. In fact, it's so bullish that if you measure out this buying candle, it is over 114 points in 5 minutes. You know how much buyers we need for this? That's insane, right? So we're like, okay, well, we took out everything to the downside. We have a DOL sweep. We haven't taken out anything to the upside. We have room for higher. We have a ton of buying pressure kicking in, and we're about to inverse 2 of these massive fair value gaps. So if we get the inverse off this, we can potentially take longs into our remaining price targets above and be pretty green on the day. And that's exactly how we took longs, resulting in a beautiful winning trade just like that, right? Resulting in a crazy 85-point trade. All right, guys, so that was the first trade for today. Let me know in the chat. Give me a thumbs up, type of 1, type of yes if you guys understood it, so I know to move on to the next one. All right. In the meantime, let me see. Blast, if we're trading your alerts with a fresh eval account, what sizing makes sense for a good risk management to you? About 7 to 10 or is that too high for someone with a 1.5k to 2k drawdown? Okay, I'm gonna be completely realistic with you guys, and completely realistic. And I know it's not something that you guys might want to hear, but when it comes to trading evals, not PAs, evals, I suggest just trading heavy. Um, and the reason I tell you guys is because look, when you're trading evals, in my opinion, they're a waste of time. In fact, it's not even. I don't even think it's an opinion. I think it's a statement. Evals are literally a huge waste of time. So for me, the way I trade them is I go heavy on my eval accounts. I'm talking 20 micros or so, and I try to pass the trade in one to. I try to pass the account in 1 to 2 trades. Right now, let me answer your question in a PA. Right, in a PA account. Right, I personally say if you're trading Apex, right, and you're on a PA account, I'm sure you know that you have an unrealized trading drawdown. Right, I would say to size. Hold on. That's too young. I'm a little tired. I would say that if you're on a fresh PA account, not an eval, on an eval, I would say just size heavy, just do 20 micros until you pass the account so you don't have to waste time with the evals. But if you're on a PA account, trade about 5 to 7 micros until you freeze the drawdown at $52,600. And once your drawdown is frozen, you size heavier and you hold runners. Now, before your drawdown freezes, do not hold runners. Why do I say this? Well, if you're holding runners while the trade is going, it's in your favor, right? You took profits from most of your contracts, you're holding some runners, whatever. If the trade ever goes back down to break even, since you have a trailing drawdown, on paper you got stopped out at zero profit and zero loss, right? At break even. But if you look at your drawdown, it could be down $100, $200 for no reason. So my tip to everyone: when you're trading PA accounts, always take profits at a 1-to-1 risk-reward ratio until you freeze your drawdown. Once you freeze your drawdown, you guys can size heavier. You could take most profits at your price targets and hold those runners to continue going higher. All right, and that's how you really make money. All right, or how you make money behind these accounts. All right, so if you guys want, clip it, save it, whatever, and follow it. I've always done it like that, and I've always loved that type of rule. Let me see. That trade was crazy live. Let me see. That trade was crazy live this morning, dude. Yeah, the trade was really crazy, bro. One of my favorite trades, recently. What's the difference between evals and PAs? Eval is kind of like Apex or the prop firm testing you to see if they should be giving you money. You don't make any money during evals. It's kind of just like a test. And a PA account is anything that you make inside of a PA account is your money. That's money that you can request going forward. All right. So eval, it's just you proving to the prop firm that you deserve a PA account, or you earned the PA account, and then once they give you the PA account, any money that you make, you can request. All right, after you hit the targets and everything. I'm still a bit confused on where the entry is supposed to be when you're using your strategy. Well, remember, off the inverse. All right, so let me turn off this indicator. Maybe it's a little bit confusing with all this, stuff on the screen. Once again, the entry was from the inverse from the bearish value gap after the DOL sweep confirmed bullish. All right. Yeah, exactly. Let me see. When will Apex be 80% off or more again? I don't know. I don't really work at Apex. I wish I knew, but it should be soon. They do it pretty often. They do it every few days, so it should be soon. Soon. Maybe next week. Who knows? Or maybe over the weekend. All right. Anyways, so now that we're pretty much done with this trade, let's move on to the next one, right? And the next one, I'm not gonna lie. Do you guys want to do this ES trade right here? This was what I'm not gonna lie to you guys. This was one of, if not my most favorite trade throughout the last 2 months. So if you guys want me to review this one, let me know. It's a pretty straightforward trade, but there's a lot that went into it. Like a lot more different than what we typically do. It's like the same thing that we always do, but a little bit like extra steps. So it can help you guys kind of like, identify a little bit more confirmations and a little bit more confidence behind the trades. Using an S&T divergence. So I can teach you guys that if you want. And honestly, every other trade, I feel like it's kind of like the same. You know what I mean? An inverse from the DOL sweep with buying pressure, blah, 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 whatever. But this one is a little bit different. Like I like it. I'm gonna review this one. All right, so let me open up ES real quick. Let me go over it. Let me search up NQ real quick just so I can have it right there. Okay, ES. All right, let's go to MES real quick. Boom, boom, boom. Delete everything. Let me make sure I have the indicator pretty much ready. Let me delete this one and use indicators. There you go. I should be active. Let me see. There you go. Okay. So We ended up catching this trade on the 28th at 9:42 in the morning on the 5 minute time frame. I'm assuming, yeah, 5 minute time frame at 9:45 at 10:28, 10:28, 10:28. So let's go to 10:28. 10:28, 10:28. Right here. Okay. Wait. Right here. Okay. There you go. All right. In the meantime, let me catch up with the chat. In the meantime, let me see. I'm having trouble knowing which ticker to trade when NQ and ES aren't following each other. How do you know which ticker to trade or look at? It's actually pretty simple, or not really as simple as no, not simple, but just look for whichever one. Okay, whichever one looks stronger, just trade that one, right? So let's say, for example, right, ES and NQ. ES is going up while NQ is going down. We can see that ES continues to break new highs and it continues going higher and higher and higher while NQ is trying to go down, but it's not really going down as strong as ES is going up, right? So we know that the whole reason as to why NQ is not going down is because ES is holding it up, right? So which one is leading in this case? ES, right? So if ES is leading, then it probably has more volume, more interest, more everything, and you should probably be trading that one. You know what I mean? And I get it. Sometimes you don't like trading ES, or maybe NQ has a better setup. It doesn't mean that you can't trade NQ. It just means that you have a less likely chance in the trade playing out because NQ is not the one that's leading. You know what I'm saying? And I'm going to show you a very, very perfect example with this trade right here. So don't worry. I got you right now. All right. So coming into market open. All right. Yeah, coming into market open. In fact, hold on. Let me do something. All right, I'll put the wrong one. MQ right here. All right. So, bro, what? There you go. Okay. So coming into market open, right? Oh, the market actually opened up not too long ago. Wow. Okay. Anyways, so coming into market open on both MNQ and MES or NQ and ES, same thing, right? Let me go over to the 5 minute time frame. Let me go over to the 28th at 9:40, 9:40, right here, 9:30. Let's do 9:30, right? Let's do some S&T divergence kind of studying here, right? So check this out, Fabian or Joker, right? Wait, in fact, let me see. Blas, how do I master your strategy? Oh, dude, asking questions, being on the charts, exactly. Screen time, journaling, experience, trial and error, constantly just data, and you'll have it. You know what I mean? Everything takes practice. Same way you go into college. Obviously, if you want to be a doctor, you're not gonna be a doctor overnight. You know what I mean? You have to do a lot of studying, lots of trial and error, lots of lots of everything, lots of research, and lots of everything. Same thing goes to trading. You know what I mean? Treat it the same exact way. You gotta trust the process. Exactly, bro. You fall and you gotta get back up, bro. You can't be a little baby about it. You know what I mean? That's how it is with some people. Anyways, so all right. So Fabian, this review right here that we're gonna do right now mainly goes to you, all right? Because you're the one that asked the question. Now, for those wondering what Fabian asked, he said, I'm having trouble knowing which ticker to trade when NQ and ES aren't following each other. What is this known as? This is known as an S&T divergence. Yes, NQ and ES should always be following each other, right? But sometimes there's going to be days where NQ is going down while ES is going up. This is known, once again, as an S&T divergence, right? How do you spell it? Like this. SMT divergence. I think that's how you spell divergence, right? I think it's an E. Divergence, right? This is what it is, right? What does this mean once again? Most days, NQ and ES follow each other. If NQ is going up, ES is going up, and vice versa. If ES is going up, NQ is going up. But once again, there's going to be days known as choppier days, right? Not the cleanest days, where, NQ could be going up while ES is going down. All right, so let's get to this review. All right, now, I'm not going to show you guys how to find the levels of liquidity in this case because I'm sure you guys already get the point. So I'm just going to speed run marking out the levels of liquidity. I'm sure you guys can catch up as well. But let's do this, all right? So let's start off with NQ, right? Let's go over to the 1 hour time frame as per usual, and let's find all of our levels of liquidity. All right, so looking at the 1 hour time frame, what is the first thing we do? Well, let's go ahead and mark out every single level of liquidity. Once again, I'm going to speed run through it. I'm not going to explain why every level is a valid level. You guys get the point, right? So let's mark out this one. Let's mark out this one. Let's mark out this one. And let's mark out this one, right? We're all-time highs. There's not much to mark out, but let's mark out this one just in case. Right, let's go to the 30-minute time frame. Do you have any other ones to mark out? Not really. Let's go to the 15-minute. Any other ones to mark out? Oh, yeah, there's actually a few. Let's mark out this one. Let's mark out this one down here. And let's mark out this one down here. All right, do we have any other ones? Yep, right here. A little pullback, but it's valid. And then you can mark out this one, but I'm not going to. Right, now let's go over to ES. Right, let's go on the 1 hour time frame. Study everything real quick. And make sure that my indicator is not on, just so it's not confusing. Okay, let's mark out. Let me see. Okay, let's mark out the all-time highs. Let's mark out the low right here. Let's mark out the low right here. Let's mark out the low right here. Right here. Right here. It's kind of the same thing. There's no point in marking it out. Yeah, it's kind of the same level. Let me mark it out here just so it's less confusing. Okay, let's go to the 30-minute time frame. What else do we have here? We have another pullback right here. And that seems like it's pretty much it, right? Once again, let's go to the 15-minute time frame just in case we miss a level. This one right here, I don't want to see the pullback, but yeah, I probably want to use it either way. So yeah, we have the main low, higher low, nothing here, just chop. Another pullback here, another pullback here. We have all-time highs marked out. And yeah, we're pretty much ready, right? So wait, in fact, let me mark out this Asia high as well because it's going to play a very big role in this trade. So we have the Asia high. So let's go ahead and just pretend this candle never happened. Just like that. And then let's go to NQ real quick. Let's go all the way back to this Asia level over here as well. Just like that. All right, let's mark out all-time high over here. And let's mark out all-time high over here. Or this Asia high over here. And yeah, that's pretty much it. All right, so we have both of these charts ready, right? And this is going to be very important, right? So I need you guys to really, really pay attention here. All right, especially you, Fabian. All right, before I do that, let me catch up with the thing. Okay, so your zone of liquidity is where long wicks to the opposite side of the trend. Yes. Let's see. I noticed you're marking out the small pullbacks. Why is that? Sorry, I'm just trying to learn. Dude, you don't have to be sorry at all, bro. Just ask your question, and I promise you I'm going to answer it. All right? Now, remember, any pullback in the market is a valid level of liquidity. Now, obviously, some pullbacks may be a little bit bigger than the rest, which makes it a little bit more, a little bit more valid. But doesn't mean that the smaller pullbacks are just not going to be valid at all. You can still use them. They're just not going to be as strong as what you might be thinking. You get what I'm saying? So, yeah, you can still mark them out. It's not a big deal. But the bigger ones, those are the ones that really are important, right? Those are the ones that really get respected in the market and give you the reaction that you might want to see, all right? Once again, that does not mean that the smaller pullbacks are just not important anymore. You know what I'm saying? I'm listening. All right, let's get this done. Let me see. Indicator doesn't catch this trade due to... Bro, I know, bro. Don't worry. I'm going to explain it, though. Don't worry. All right, anyways. So, looking at M and Q, or NQ, right? Let's focus on NQ first. All right, let's kind of get an understanding of what's going on, right? So we have all of our levels of liquidity marked out, right? We have the London low, the external low, the Asia high, all-time high. We have everything, right? So let's come into market open real quick, right? So coming into market open, it'll be around here, right? So let's kind of play the candles going forward, and coming into market open, we can see that we have a few things going on, right? And what are those few things going on? Well, coming into market open, before the market open, like 30 minutes before the market opened, we can see that we took out the Asia high up here. Right over here, and we also took out the all-time high right over here, right? And we're selling off, which makes sense, right? Because we took out the final two highs in history of NQ. We took them out at 2618.50 and at 26.26 or 2626 up here, which is the all-time highs, right? We took out the levels, right? These two levels of liquidity. We took out all of the orders, and we're rejecting back down quite quick, right? With selling, which makes sense, right? We sweat the levels of liquidity. We're getting a DOL sweep. We're getting selling coming in. We're pretty bearish. Right? Doesn't catch it, but shows the setup. I gotta see. All right, anyways. So we took out these two levels of liquidity and we sold off, right? Now let's go into market open. Remember, the market opens up right here where my mouse is. So let's go over there. Right? And coming into market open, we pumped up even more. Right? So in this case, our bias technically is bullish. And that's because, remember guys, with our model, our bias, no matter what, is always going to be based off the most recent level of liquidity taken out, right? Now, which is the most recent level of liquidity taken out? Well, in this case, it would be the level of liquidity at 2626, right? This all-time high over here. So, as long as price is able to hold above this level of liquidity, we are bullish. Now, although we're bullish, we don't want to take longs. Why? Because we're at all-time highs currently. And above all-time highs, there is nothing to target. Now, I get it. A lot of you guys, when we don't find trades at all-time highs, a lot of you guys are always like, dude, but the market is pumping. Why don't you just long all-time highs? No, that is possibly one of the most stupid things that you can do. Let me explain. When you enter a trade, you have an idea of what to expect, you have an idea of what to risk, and you have an idea of what you're gonna make. When you're trading above all-time highs, you have no idea what's gonna happen. You have no idea where the market's gonna reject. You have no idea where it's gonna reverse. You have no idea what to target because we have never been this high up. So there's no price targets anywhere up here, right? So if I enter longs right here and we go back down, I'm gonna be like, dude, I didn't know why we rejected. You get what I'm saying? So do not long all-time highs. All right. Okay. Now, looking at NQ before we go over to ES. Coming into market open, we created a huge bullish fair value gap, right? If you measure out this candle, it's not, it's obviously a fair value gap. We can see it with our two eyes, right? But yeah, we can see it's a 42-point candle. So it's quite a bit of a candle, right? So ideally, since we're not going to long all-time highs, although our bias is bullish, what do we wait for? A trend flip or a bias flip, right? So our bias, if we get the right setup, right? If price is able to reject up here, go back down to this fair value gap, hold below the most recent high taken out, which is 26.26, hold below it with enough selling to inverse this fair value gap, we can look to take shorts into this low, this low, this low, this low, and this low, right? So we can look for shorts something like this, right? We can just target these small internals, right? Something like that, right? Looks pretty good. Well, let's kind of play these candles going forward, right? We got a little bit of selling here, right? It should be right, I think here, right? We got a lot of selling, right? It looks really good. We're like, hey, NQ looks really primed for shorts, right? We have the selling coming in. We're still, although we're getting a lot of selling, we're still technically bullish because we're still holding above 26.26, right? The all-time high up here, right? But we can anticipate what's going to happen, right? We're selling off, you know, we're all-time highs. It makes no sense to go higher. We're expecting us to go lower, right? Okay, well, let's keep playing the candles. We pump up, whatever, and then we pump up even higher, and then we dump back down. So what's going on here? Nothing. Straight chop. Now, remember this, right? Keep this image in your head. Keep this image in your head, right? Pump, you know, nothing going on, a little dump, straight chop, right? But remember what we thought here, right? We took our all-time highs. We tried sweeping it with a little bit of selling, didn't hold, right? And we want to be bearish, right? But we never got the confirmations nor the confluence. Now, if we go over to MES, or ES, I guess you could say, let's look at that same exact setup, right? So once again, we have the Asia high. We have the London low, external London, external Asia, right? And then we have the all-time high at the Asia high above, right? That's coming to market open. Coming to market open, or before the market opens, we just finished taking out this Asia high, right? Obviously, we get like a little sell-off, you know, whatever, nothing crazy, whatever. But we're trying to sweep it, right? Then as we go into market open, we pump up even harder, right? So coming into market open, what's going on right here, right? Well, we just created another bullish fair value gap over on yes. So we're going to go ahead and mark out this as a gap. Now, remember, same thing like the last setup, right? On NQ, we broke out some highs. We created a fair value gap. We tried sweeping it, but NQ was kind of on its little shit show where we knew that it wasn't tradable. So like, okay, well, if NQ is not doing anything, is ES doing something? Maybe it has a little bit of an S&T divergence, right? Which we can possibly trade, right? So right here, same exact setup as NQ. Once again, remember this, right? We took out the Asia, we took out the all-time high, we created a fair value gap and all that good stuff, right? Look at ES, same exact setup. We pumped up, we took out the Asia high / all-time high, we created a fair value gap, right? Now, what makes ES a little bit different? Well, when NQ was trying to sell off right here, right, at 9:15, right? What did we do right here? Well, I'm on the 15 minutes time frame. Oops. There you go. What did we do at 9:15? Well, we started getting some more selling, right? But once again, let's compare these charts. Right? Same exact setup. We took our all-time high, we took our Asia high, we tried selling off, we had a fair value gap, right? Compare the setup here, compare the setup here. What makes ES different and what made ES look better, right? And what's your name again? Fabian. Pay attention, all right? Let's compare per candle. Let's play this candle on NQ. Right? We pumped up. We hit the fair value, we pumped up. Let's look at ES. 9:15, we're selling. Next candle, pumped up. All right. Let's play the next candle on NQ. Okay, we pumped up. All right, let's look at on ES. Okay, you know, like a little bit of a pump. Not. NQ looks stronger, right? It's a little bit of a stronger push up, but you know we're still holding green. All right, let's go to the next one. All right, NQ, next candle. pump up, right? Huge pump up. We broke above the previous high and everything, right? Huge pump up, right? Pay attention. This is where it gets important. Pay attention. Pump up on NQ. Above London, huge wick. Yes. Next candle. Oof. Why is it red? S&T divergence. All right. So coming into market open, we have an idea of what we want. Obviously, we don't want to long all-time highs. We have an idea of, hey, I want to short this fair value gap because of the DOL sweep with selling coming in, if we can get that. Once again, look at this candle, 930, right? Look at this candle, 930. Pumped up, dumped down. You see what I mean? Now, let's play the next candle. Next candle on NQ, what does it do? Sells off, right? Red candle. Is it enough of a red candle to inverse this fair value gap and get a DOL sweep? No, right? We're getting the idea, but not enough. But if you look over on ES, once again, we have the same exact setup. The same exact setup. Look at ES. Next candle. Boom, straight selling into the inverse, right? And not only the inverse, in fact, we have the DOL sweep from the all-time high at the Asia high over here at 6917.75. Do you see what I'm saying, Fabian? So right now, although NQ tried selling off, we're technically still bullish on NQ because we're still holding above the most recent high taken out, which is 26.26. While on ES, not only are we getting the selling pressure that we want, but we're also getting the bias confirmed to bearish because we're now holding below 6917.75, right, which is the all-time high level. We're holding below it, and we're getting so much more selling on ES rather than NQ. While NQ is just sitting there and doing nothing, ES is actually getting work done, right? So we're like, okay, well, if NQ has the same exact setup as ES, right, and ES is selling stronger, we could just take it on ES. It's the same thing, right? So what I looked for here is I'm like, okay, well, ES looks pretty good. If we look to take shorts, we can do like a 6-point stop loss around there, and we can just look to target all these levels of liquidity below. Simple enough, right? Well, next candle comes along, and we dump. So we enter. Once again, if you guys check out the alert right here, we took ES short at 6915.75. Right over here, here's how the chart looked like. Once again, right, same exact setup, right? Now, keep in mind, ES has a red candle into the entry, right? Look at this, right, at 940. Look at NQ. Play 940. Right here. What is NQ doing? It's pumping up. So we have a huge S&T divergence here, right? NQ is going up with no direction while ES is going down with direction, right? So in this case, which one looks better, right? It's a no-brainer. ES. It's doing what we want to see, right? Because obviously we don't want to lock out all-time highs, right? It's actually moving way better than NQ because NQ is kind of just chopping up here. It's not breaking any highs. It's not breaking any lows. But if you look at ES, it's straight to business, straight to breaking new lows constantly, right? So we already know which one looks better in terms of momentum and in terms of trend, right? Once again, NQ, we tried shorting it because we're not trying to long all-time highs. We didn't get the DOL sweep. We never got the fair value gap inverse. We didn't even have enough selling that we wanted. But on ES, we took out the Asia high. Right over here, we got the selling pressure, we got the inverse, and we had everything we needed. So we took shorts on ES instead. Shortly after, this trade played out for, if I'm not mistaken, about 10 points, right? Yeah, look at that. So this trade was beautiful. I mean, it really couldn't have gotten any better, right? So hopefully, and this goes for everyone in here, hopefully you guys understood more of this, what's it called? Like review with the S&T divergence. Now, remember, I'm not trying to trade like review like a million trades because realistically, they're all the same trades. You know, my motto is the same thing as always. But this one was a little bit different because there's a lot more information behind it, right? What's the S&T divergence? Okay, once again, you guys know NQ and ES, they're like brothers, right? Brothers and sisters, right? Let's just imagine that, right? Let me see. Can you go over the comparison between NQ and ES divergence? Yeah. So there's no comparison. They're the same thing, right? ES holds the top 500 stocks while NQ holds the top 100, right? So there's going to be days, typically like 90% of the time, right? ES and NQ, they're like brothers. They're like a family. They follow each other, right? So if NQ is going up, there's a good chance that ES is also going up. Maybe not as strong, but it's going up, right? And vice versa. If ES is going up very strong, there's a good chance that NQ is going just up just as strong, maybe a little bit less, maybe a little bit more, right? Now, there's going to be days where the market is a little bit choppy, a little bit, without direction, a little bit, without momentum, right? And we have an S&T divergence, right? So pretty much what that means is that there's going to be days that there's that NQ or vice versa, right? NQ and ES, it's going up while the other one is going down. That's known as an S&T divergence. Now, how do you know which one to trade? Once again, whichever one just makes more sense to you. Whichever one is moving, whichever one has a better setup, whichever one has more price targets, and it looks more aggressive and in more control, you take that one. Right? So let's compare it. Let's compare it. All right? Let's compare it. Let's look at NQ. Does it look like it has any like strength, whatever? Sure, it looks like it's in a bullish trend, but currently right now with what we're trading, is it tradable? Whatever. But look at ES. It looks so much more tradable. So in this case, we would use ES, right? And that's exactly why on the 28th, I traded ES over NQ because it just looked so much better. And at the end of the day, it played out for over 10 points. Now, I get it. Maybe you guys are new to trading or whatever. 10 points now might not sound like much, but I promise you guys, 10 points on ES is like an 80-point trade on NQ. That's how much it is. Like, it's a lot. 10 points on ES is a lot. All right. Now, let me see. Check the continuation model on your alert from the 29th of September. Very, very nice trade. All right, I guess we can get one more review going. 29th of September. Damn, bro, September. Wait. Yeah, it's September. Damn. September. I don't really take continuation models all that much, but let's check this one out. Now, before I do this one, let me catch up with the chat. Such a good example. Yeah, I'm telling you guys, it's not even that hard. Will one always chop and be noticeable? Like example that you're doing? No. Sometimes it's literally telling you like, hey, maybe don't trade it. It's not always gonna be as simple as that. But yeah, sometimes it will just be too choppy. That's your cue to just not trade it. So yeah. Okay, so you set zones of liquidity for both ES and NQ. Then when the session starts, you compare where the trends are going. And depending on your confluence, you choose the best setup. Exactly. You literally couldn't have said it any better. All right. Yeah. Literally exactly how you said it is exactly how you do it. Exactly. Now, for the most part, I'm sure you guys all know this, but NQ is so much more volatile than ES. So there's like a 9 out of 10 chance or like a 99% chance where NQ will look a little bit better than ES or just way better. So we always trade NQ. If both are choppy, exactly. You don't have to force a trade. You don't have to. 15 minutes time frame, by the way. All right, bet. All right, check it out. So on the 29th. By the way, I'm gonna skim through this because I'm planning on ending the stream soon. I have to do something really quick. So yeah. Let's see. So on the 29th, you said. So let me check it out. Check it out. Okay. So let's go to MNQ. Let me delete this. On the 15-minute time frame, you said. Go all the way back to September 29th. We took this trade at 10 a.m. September 29th. Right here. At 10 a.m. So right here. We took shorts, right? So it should be right here. 9:30. All right, let me check it out. I'm just gonna use the indicator. I'm not gonna mark anything out or just even review it. But let me see if it works. Oh, that's right. I have to use the new version. Hold on. Let me add it to my favorites real quick. One sec. All right, let me refresh my. Please don't tell me reset. Ah, damn it, reset. One sec. 29th, right here. Right here. There you go. All right. Indicators. Let's go. Let me delete the other one. All right, let's check this out. Okay, so you set the continuation model on the 15-minute time frame. I remember it was this gap right here, right? Yo, this dude, bro. Nah, bro. On it, bro. You're good. All right, let me check it out. So you said the 29th of September. Wait, hold on. 10:18. You said we took a continuation model. Off what price? 24,975. So, right here. Let me check this out. Hold up. So we took out the level of liquidity. Well, I'm not gonna lie. I think we tapped exactly into it. I'm ready for the hot dog stream tomorrow. Bro, I gotta find it, bro. I gotta see if I even have it, bro. I'll see, bro. I hope I don't get your hopes down. Oh, but bro, Hanif, I'm not gonna lie. Let me do it on NQ because I think MNQ is a little like a little off by like a tick. Hold on, let me backtest it real quick. Right here. Oh yeah. You see what I mean? It swept it on NQ, but not MNQ. Oh, you need to enable the continuation model in the same. Oh, I didn't know that. Continuation model. Oh, yo, that's sick. Oh, yo, that's fire, bro. All right, let me practice this. All right. So if on the high of the candle, 1 minute intervals. So the entry should be here. Obviously, the trade status should be open, right? It should get locked once we break below this entry here, right? Why is this yellow? Oh, that's where it's telling you to enter. Wait, why is it yellow though, Hanif? Let me see. Let me see. I'm assuming this is where the trade should lock, right? At the yellow. Let me see. Right there. Where my mouse is. Let me see. Let me see. Let me see. Hold up. Yep. Okay. Okay. So the yellow means that's where the trade should lock. So this is where you should enter. How do you know it's gonna reverse? Oh, I'm not gonna back this trade. I'm just kind of like just testing the indicator. You selected both models. Oh. Oh. Okay. 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 Ah, because it was showing this inverse from here. That's right. Okay. Okay. Got it. Got it. Okay. So I just want to see the thing is we rejected off this one by a tick. So I'm assuming as it finds new highs in the fair value gap before it gets to entries, it's gonna keep like marking out the new high inside of the gap, right? Because let's say, for example, right, the next candle opens up, we break past the new high and we hit the midpoint. The indicator, since we never entered, since it never hits they hit the 30-point mark, it would just mark out the stop loss from this high into the next high. Yeah. Okay. Bet. So I'm assuming this one was pretty much straight off the bat, right? So the candle opened, we sold off in the next one, boom. So that's fire, bro. I want you to do. Let me see if I can find another because this one was like kind of like too perfect. I feel like. Let me see if I can find like another continuation model trade. The thing is, I don't really take them as often. So, dude, this trade I ended up playing for 145 points, but this trade was crazy. All right, let me see what we have here. This is an inverse, 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 inverse. Dude, I take so many inverses, bro. Another inverse. Oh, right here. Continuation one. Ah, but this one was a little confusing. Well, let me try it. Let me try it. Because I know this one, the indicator might get a little bit confused with. You know what I mean? Because the thing is, the bias was bullish because we're holding above this level of liquidity. We took shorts because we rejected off this fair value gap and then we shot down into it. Every when do you do these lives? Maybe like every like 2 weeks or so. Maybe every like week or so, actually. Nah, like every 2 weeks. Okay, let me test this one just in case. Just in case. I know this one was confusing and the script is probably gonna get confused with it, but you never know. So on the 7th, let me go back. This was on the 5 minute time frame. So let's go a little bit forward. This was on the 7th of October. So right here. And then we took shorts right here. Right? No, 11. So we took shorts right here. Let me go on the 5 minute time frame. No way it found it. Oh, dude, Hanif. Dude, it found it, bro. No fucking way you did it, bro. Dude, this trade, even for me, it was confusing to even find. No way. Dude, you are a beast, bro. Okay, hold on. Let me see. So, once again, okay, so our bias is bearish, right? But we took out the low, so it should be bullish here. Yeah, bullish. Well, bearish, but bullish now. Yeah, there you go, bullish. Hold on, let me see something. Hold up. Dude, Hon, if you are a beast, bro. Okay, hold on. So, wait, if I hold shift, okay. So, it's bearish because we're holding below the level of liquidity. But if we play the next candle, we should be, wait, because it's still sitting on the level of liquidity. So, if we play the next one, how come it's sitting bearish though? Because we're technically sitting above the level of liquidity here, unless it's tracking these instead. Because, dude, regardless, it found the setup perfectly. Oh, it's because wait. Because if I put the inverse model, then it will probably be reading bullish, right? Let me see something. No, the buy is still gonna be reading bearish. But wait, which level of liquidity is it reading then? Because technically, our buys, we took out this low here, so our buys should be bullish as long as we hold above it. But it seems like it's probably just reading the buys from these, either one of these two lows, which was reading bearish. Which is why, I mean, to be fair, we took the same exact trade either way. You know what I mean? We took it off this right here. But remember, we had our reasonings. Our reasoning was like, hey, we retraced into the fair value gap, right? Let me see something. Next, wait, let me see something. Yeah, you see, it's holding above the level of liquidity, so it's supposed to be reading bullish tech, like, probably because they're close together. I don't know. Let me see something. Hold on. Nothing happens here. Nothing happens here. Okay, so it locked the trade. This is where we entered. Like literally the same exact entry. Wait, it gave us an entry at 25.9096. We entered at 25.81. So we got a little bit of a later entry than the indicator. But still, it literally found this. Guys, look, I alerted this trade here. Same exact chart. Look at this. Fair value gap rejection. We're holding below the level of liquidity. We're bearish. Very strong selling into the fair value gap rejection. Right? Look at the indicator. Fair value gap rejection. Drawn liquidity sweep. Or not sweep, but hold below the drawn liquidity sweep. Selling coming in strong. Same exact price targets. Now, I want to know which level of liquidity it's reading here. Hey, how's it go? What's good, bro? What's up? What's the finest? What's up? You see entries below the sweep, so at the entry time, buys is bearish. I have to understand this one a little bit. At least I want to understand why it's reading bearish at this time here. Because technically, I was even bullish at this time. Do you get what I'm saying? Because look, right here, right? Let me play like a few more candles. You see what I'm saying? Like we're holding above this, the most recent level. So technically, it's supposed to be reading bullish temporarily until we hold back down below it, which then it's going to be tracking the continuation model. I mean, all in all, this trade was pretty confusing even for me. So I don't really blame you or the script at all. I mean, it was a confusing one, but still, you know what I mean? Let me see if I can find another one. Hold on. When's the next time I took a continuation trade? This trade played out for 100 points. This shit was nutty, bro. This was the inverse, inverse, inverse. Wait, someone's calling me. Wait, my friend is calling me, guys. One sec. Yo. Yeah. How long? 20 minutes? Bro. All right, bet, but just come over. All right, bro, hold on, cause I'm streaming, bro. I'm streaming. Just slide, bro. Bro, just text me, bro. All right, bet. All right, I'm back. All right. Anyways, all right, we found another one. Okay, so on the 16th, we took a short at a continuation short. So let's see if it tracks this one. So let me see. Nah, bro. Like this dude's calling me. I'm like, dude, yo, I'm streaming. He's like, no, hold on. I can't hold on, bro. I have people watching me right now, bro. Anyways, all right. So we took this shit on the 16th at 12:45. On the 16th, 12:45. 16th, 12:45. 16th. 12:45. Right here. Okay, let's see if I can find it. It's tracking break even. So I probably already. Oh, wait. Hold on. I'm tripping. Okay, for valid continuation. Like it's gonna be tracking. Hanif, you are a demon, bro. It found it. It literally found the same. Guys, this same exact setup that I marked out here. Look, remember the chart, right? fair value gap off this huge thing right here. Entry at 790. Stop loss at 830. Remember, look, stop loss 830, entry 790. Remember the picture of the gap. No fucking way, Hanif, bro. You are a demon, bro. In a good way, in a good way. Dude, hold on. Let me play this next candle then. It should have you the entry. Bro. Trading view replay doesn't really work for this one. Bro. Oh my. It worked. It literally worked. Look, we're already in shorts. Same stop loss. Look, stop loss 831. Look at my alert. Stop loss 831. Same exact stop loss. Dude. I don't know how you did it, bro. I really don't know how you did it. But it literally found everything. Look at this. And the trade played out. No, it actually didn't. Wait, when did I take profits on the trade? Oh, it hit 40 points and then I got started to break even. Dude, Hanif. Did you just pay someone to replace you? Bro. Dude, you are crazy, bro. You could just put the timer. Nah, it would just play the candle slower. It doesn't really change anything. Imagine if it did everything for you. Maybe in the future, but for now, we're just gonna keep it as an indicator. Will you be able to move the stop loss to less? Yes. I think Hanif already coded that in, right? I mean, dude, there's so many settings here that I don't even know where it is, bro. Let me see. It should be max stop loss. One sec. So if you change the stop loss, it will give you like a different entry. Same stop loss, but different entry. Like a less entry, like an earlier entry. Stop loss. Max sweep. Let me see. Hold on one sec. Stop loss. I know you could change it, right? Trade management at the bottom of the UI. Oh, right here. Look. Wait, no. Is this a stop loss? Oh, right here. ES profile. Yep, you could change it. Bro, Hanif, you are a goat, bro. Yeah, I see. Yeah, bro. You're crazy, bro. Literally crazy. And yeah, this trade ended up playing out for 40 points. So it should have hit the 1-to-1, right? I mean, it did. I don't know why I didn't mark it out here. Let me see. Hold on. Let me double check. Because remember, we got the entry here at 801. Next candle worked out. Wait. Yeah, it literally hit 40 points. So you should have think either way. Yeah, I'm sure you guys would have been paying attention. Dude, yeah, you're a beast, bro. Literally, bro. For those that don't know, why, maybe you guys are probably in the stream wondering, like, dude, why do you keep saying Hanif? He's one of the developers, one of the main developers. Dude, he is a GOAT, bro. He's making this turn into reality. So you already know, bro, I'm gonna be paying this guy heavy. I'm gonna be giving some big kisses, bro, for the work. Nah, but seriously, though, like, dude, you are a GOAT, bro. I'm also sending you the payments, by the way. I haven't gotten to that. but yeah. If anything, just DM me. If anything, I'm gonna DM you right now. Oh, hell no. Nah, bro. You gotta get it, bro, from David, bro. But yeah, other than that, guys, bro, I'm gonna call it a stream. I have my friend coming over. He's on a rush for some reason, so we're gonna get some stuff done outside. And yeah, all right, guys. I feel like we did a pretty good backtesting session today. The indicator is pretty much ready. Like it's ready. Like I don't know what much more to add on to it. But yeah, I feel like maybe like 1 or 2, maybe 3 more like little sessions like this, and we should be good. You know, we should have it ready by next week. A good life, dude. Amazing life, bro. But yeah, other than that, guys, amazing day today. Hopefully, you guys are able to make some profits with me in the morning. I will be live streaming tomorrow. Maybe I do some commentary. I don't know if I want to keep trading for tomorrow. I'll see how I'm feeling. But yeah, I will be live streaming tomorrow. No matter what, I will be live. All right. But yeah, other than that, guys, I'm gonna go ahead and get off. I'm gonna go take a quick shower. And yeah. All right, guys. Thanks again. I got you, Fabian. I got you, bro. All right. Other than that, guys, I'll see you then. Peace out, guys. Take it easy. I'll see you guys tomorrow on the stream. Peace out.